Hello, fellow traders. 'Tis I, the Rumpled One. It's Tuesday, February the 26th. The year's 2019. Let's talk trading. How to trade like a pro. Know what you're trading. Many traders come to Forex after trading stocks or some other instruments, but they don't really know what they're trading when they're in Forex. And you really need to know what you're trading. So, for example, I hear traders say things like they're trading the 4-hour chart or they're trading the 15-minute chart. And I say, no, you're not. We're not trading charts. What are we trading? Well, people think we're trading currency pairs, like I usually show the euro yen, but we're not trading pairs. We're trading currencies. In other words, if I buy the euro yen, I am buying the euro and selling the yen. Now, if I short the euro yen, I'm selling the euro and buying the yen. In other words, you're basically trading one pair against the other. You're saying one pair is going to go up relative to the other. So you have to understand that you're trading in currencies, not pairs. And that's an important distinction. It really is. And so you really need to know what you're trading. Now, I placed another indicator on one of my charts here. This is the holos chart, daily, weekly, monthly, yearly. Look at the holos. But I placed an indicator that I modified. Okay? So, it shows the strength, relative strength of the currency pairs compared, or I'm sorry, the currencies compared to the other ones. So, when you're trading pairs, so right now we got the euro yen, and it's saying the euro is 0.1 stronger than the yen, so it's saying to buy it. Now, there's been many strategies put out there off of this. In other words, if this is the strongest and this is the weakest, what do you think you should do? So, do you think you should buy the pound dollar? Or do you think maybe you want to short the pound dollar? You see, it just all depends. As you can see now, euro yen is getting stronger relative, or the euro is getting stronger relative to the yen. So you have to understand that, if you fixate on one pair, that's okay, but you have to understand what role it plays in the bigger picture. And right now you can see these two are pretty much in the middle. So you can use this, you can develop a strategy, which way to trade based on this. Now, one thing to think about is the US dollar is pretty much almighty, right? Meaning everything around the world usually gets traded in dollars, such as oil and gold and things like that. They're priced in dollars, petrodollars. So, if you see the dollar on the bottom, where do you think the dollar is going to go next? Well, it just did. It just popped up. So you might think to be long the dollar. depending on the pair. So if you were trading the pound dollar, you'd want to short it. That means you'd be long the dollar. So the question is, how long will the dollar stay on the bottom? And I've done some really interesting work with this strength type of stuff, but it was kind of like on the secret hush hush with another trader. So, you know, we kind of swore each other to secrecy. But what I can tell you is it can be very profitable. And so if you just focus on where the dollar is, you think this dollar is going to stay down there forever? Do you think the pound's going to stay up there forever? No, chances are they're going to move. They're going to move up and down, just like we watch, the pairs we trade move up and down. So based on that, you might be able to make better trading decisions in the future. But just know what you are trading, okay? And of course, when you're trading, you have to have your money in risk management. So let's just run through the charts. We still have 5 pairs that haven't filled the gap. Notice the New Zealand pairs. They're all New Zealand pairs. And for the week, you can see we broke out of that previous week's high. But let's see, we got the yearly high. We put in, and we got our yearly open right here, and our yearly low. You can see we're down on the day, up on the week and the month. Now, something interesting. If you look here, this was the high of the first day of the year. Notice what's happened here. High first day of the month. Notice what happened right around this area. See, knowing what you're trading is also knowing what you're trading, what it's done. And so having these levels where you can scan them, you can even put alerts on them if you wanted to. And as you can see here, looks like we might have a short opportunity. This big candle price is probably going to come back and retrace just like it did here. But then we've got a big candle here, another big candle there. So just have to see what price is doing and trade accordingly. And we're above the past 2 months open, and you can see here we're outside of the range of the first day of January and first day of February. Why did that do that? Now, we've been looking at these inside bars for a while, and you can see here price dipped below and then came back, shooting back through. And right now, if you had just taken that trade, you'd be up 24 pips. Now, I've been alerting you to these inside bars, what, all month, all year? It's up to you to trade them. And you can see where all the inside bars appear here off the dashboard. Only a 51 pip range. The pound pairs, huge ranges right there. Even the EURJPY came in at 97, whereas the euro yen only 51. Once again, you can see here we had a H1 lowest open, gave you an opportunity here, and came back and gave you a second opportunity. Right now we're at the 126 psychological level. And I heard somebody say that, this price level, it's like blah, blah, blah. Well, once again, we've done statistical analysis. We know what happens when price goes around the 0, 0 level. And you see, that's part of something I've told you guys, you traders, before. Focus on your own portfolio, focus on your own trades, your own methods, and don't pay attention to what other people are saying out there. I mean, if you're doing something and it's working and somebody's going to tell you it's not working, there's no reason to listen to them. Especially if they're not in a better position than you, especially if they're just some disembodied voice or post out on the internet. It's laughable. Okay, perfect example. Here we have the buy zone. We had the pivot point here. So the bias was short. We got a short trigger, took out the pivot. It was only a few pips, but it was, 8 pips away, 8 to 10 pips away from the zone. So that's a strong enough pull. As you can see, it took out the pivot. And the rat zone, somebody asked me about the rat, saying that they were getting something like 50 or 60%. I'm not sure how they're trading it. Your percentages should be higher. So I'm not sure what you're doing. Maybe you're trying to trade too quick. If you are, I suggest switch to the H4 candle color. And you can see there, it doesn't steer you wrong. But a lot of people, they try to trade the 5-minute or 1 minute, and they just get too jumpy. That's what happens to them. Way too jumpy. But you can see here the 15-minute gives some nice clear signals if you're patient. You just have to wait. Let the candle close. Let this red candle close. Here's that green. There you can see red closes, green at the break. There was opportunity. Now, once again, if you don't take those few pips, you let it go against you, don't blame the method. You can see we took out the pivot there. We took out the pivot, so you see we have a couple of missed pivots this month, couple from last month, and then the ones from last year. Price action, you guys see this time after time after time. 2 ball at the bottom, green at the line. 1 ball at the top, going red, red at the line, going for a short. In and out of the wick zone. And that person about the rat trade, yeah, wick zone's about 70% or better, but you have to trade it. I like horizontal lines. You've seen this chart before. And as you can see, we had some movement to the downside recently here on the tick chart. Einstein line. Basically, price isn't moving much. You can see it right there. So, fellow traders, you've got to know what you're trading. You have to, because it's not what you trade, it's how you trade it. So go out there and drain the banks like a pro.